Trends and ICT breaker block. When the market price is creating higher highs and higher lows like this, higher highs and higher lows, the market is on an uptrend. When the market price is creating lower highs and lower lows like this, the market price is on a downtrend. Now, when you see a market price that is on a downtrend do a move like this, where the market price goes above a previous higher low, that once went below a previous lower low. Because what makes a higher high a valid higher high is that it went below a previous lower low. That's what makes a lower high a valid lower high. A lower high is not a lower high if it did not go below a previous lower low. So what makes a lower high a valid lower high is that it went below a previous lower low. So a lower high is valid only when it goes below a previous lower low. So when you see the market price move above a previous lower high that once went below a previous lower low, and then the market price closes above the lower high, yes, and then the market price closes above the lower high, then the market is now shifting from downtrend to uptrend. It might not shift immediately, but you should take note of that. That's why I said the market is now shifting from downtrend to uptrend. So let's look at this for example. You can see that the market was moving downwards, was making downwards move until it got to this point. But look what happened here first. You can see that this is a lower high, and this lower high went below a previous lower low right here. This lower high went below a previous lower low right here. So this is what makes this a valid lower high. So marking that line, marking that lower high, and then we see that the market price moved upwards above the lower high and then closed above it as a bullish candlestick. On seeing this, we should know, if we're on the chart, we would have known that the market is now shifting from downtrend to uptrend. Like I explained, you can see market closed above a previous lower high. So now the market is now shifting from downtrend to uptrend. But then you observe that the market did not just immediately start going upwards. It came downwards to do some things. There are some things involved here. Like I know the market, there are some things involved there. So I don't even know if I'm to, let me even see. So yeah, boom, yeah, boom, then yeah, no, boom, then yeah, yes, then boom, then this what makes it valid is boom, so because you can also consider this. Okay, boom, not okay. There are some things involved here, all right. There are some things involved here. We can see that the market came back downwards, but it never went above this particular low right here. It never went above the particular low right here before it then went upwards. It then finally made a final shift upwards. All right. So that's just how it is with a shift from downtrend to uptrend. So watch out for a previous lower high, a valid lower high that is broken. So for this, the market was on an uptrend. The market came downwards. So let me see. Then, so this was actually a higher high actually. So it went above this previous um higher high. So you can see that when market price went below this particular higher low, and what would make a higher low is that the higher low went above a previous higher high. So the higher low created a move that went above a previous higher high. That what makes a higher low a valid one. So as you can see, this particular higher low went above this previous higher high. So marking that, and then we see what happens next. Market market closes below the low of the higher low. That's our change in market. That's our change of trend from uptrend to downtrend. So that's basically it, sha. That's basically it. That's basically it. So for ICT breaker block, it's just same as what was taught in other block, but the reverse is the case in terms of where you are using for entry. Like this is a bearish order block. You are no longer using the open price of the bullish candlestick. You are now using the close price of the bullish candlestick after the market price have gone above the high of the bullish candlestick. So when the market price goes above the high of the bullish candlestick, it has to return back to the open price of the bullish candlestick, the close price. The close price of the bullish candlestick, and rejects off it, and then goes upwards, or does something there and then goes upwards. It just depends on what you have observed in the market. But this is basically what ICT breaker block is. For this particular scenario, it's a bearish bullish, it's a bearish order block. And this bearish order block, the eye of the bullish candlestick has to be broken out of, and then a return back to the close price of the bullish candlestick, and then from there should be entry. Same thing for a bullish order block. This is an ICT breaker block as well, I think. So you wait for the eye to be broken out of, whether the for this, probably you don't need to observe the body breaking out of the eye. Probably you can also use the wick, probably. So you just observe how it is, all right, and make use of it based on how you think it fits anyone. Is it the week that you have observed is works best, or is it the body? I don't know. I'm really just teaching this for teaching sake. All right. So you can see that when the market price goes below the the lowest low of the bearish candlestick. So when you see a bullish order block, you wait for price to go below the lowest low of the bearish candlestick. You wait for price to go below the lowest low of the bearish candlestick, and then you wait for price to return back to the close price of the bearish candlestick. So when price returns back to the close price of the bearish candlestick, you should probably watch out for what you want to watch out for, and then consider a sell entry. All right, just as you see here. All right, so that's just it.